Hi, everyone. Welcome to the Seattle Angel Workshop Series. Our goal is to help build new angels and stronger startups. One of the ways we do that is try to connect people in the ecosystem together. And so we try to connect our alumni, both investors and companies, to each other, but also to the other angel groups in the area. And we try to highlight the different things that are possible in the Seattle ecosystem. So tonight we have a collection of funding agencies from the startup ecosystem. Going to talk about what they're doing. But before we do that, we're going to have Elaine Werfelli, our in-house data geek, who's going to tell us a little bit about what's been going on with those for a little bit. And then we'll do sort of little reverse pitches from every one of the groups that we have here to tell us a little bit about who they are and what they're working on. And then we'll go into breakout rooms, give people a chance to have more one-on-one conversations with everyone. So let's start with you, Elaine. You want to share your screen?
Sounds great. Yep, let me share screen, share, go into screen slideshow mode, and let's make sure you guys can see
Yep,
the.
looks good.
All right, fantastic. Well, everyone, thanks so much for coming. So excited to be here. Um, as a co-founder of an advanced data analytics company by day, angel investor in Seattle Angel Conference by night. I'm a total geek all the time when it comes to data. So I really get excited about sharing in investor angel investing data with you guys. And I hope that after the presentation today, you'll be able to take some new data insights away with you. We'll be looking at some PitchBook data from 2023, some Halo data from 2022, and I have to give a shout out of thanks and appreciation to so many local angel and VC groups who share their data with me every year so that we all can become smarter as a local ecosystem. So with that, let's get started. So in PitchBook, they put out a quarterly report, which is a venture monitor. So this information is from VCs. And I wanted to give you this 2023 look because the halo look for angels is for 2022. So you can balance what you're seeing here on both sides. What we have right here on the screen is the quarterly view of deal activity for both pre-seed and seed stage. The important thing to take away here is this decline in both deal count and deal value over the last 6 quarters. And when we look at things on a yearly level, in the annual basis, we can see a significant, which actually becomes a 40% decline in combined value for the pre-seed and seed deals from 2022 to 2023. Partially, this is attributed to pullback by some of those larger VCs and slowed activity in the seed stage. I am sure I'm not telling you anything you guys don't already know from both sides of the table, but just trying to quantify that for you. Despite the lower investment pace, however, the median 2023, both pre-seed on the left, seed on the right in those boxes, are comparable to 2022. So here on the left, we have at 600K, the deal size for 2022 for pre-seed, and the 3 million deal size for seed staying the same between 2022, 2023. So that is great news for those that were able to get funding in 2023. And then also always of interest is valuations. So what we saw here in 2023 for pre-seed, just a small drop in the median valuations, and in the seed and valuations, an actual increase here. So super interesting to see some of the shining highlights through for those that actually did get funded. Similarly, for Series A level deal values, what we see is that large decline. In this case, it's 44% decline on the combined on the value for Series A. On these leaner times, what actually was happening, they're saying here in Series A is many of the founders were focusing more inward to be able to get to the next milestone before the raise, so that there are some fewer companies out in the market. Also, we're seeing the decline in outsized rounds at the Series A level. In here, when we're looking at the Series A, we're seeing both on the left, this is a deal size, a small deal size decline year over year, and to the right, median valuation decline over time here. So a little bit different than what we saw in pre-seed and seed. So thanks to PitchBook for that insight that gets us quite up to date. When we move to the Halo report, the Halo report is back from 2022. And in this most recent Halo report, we see a large decrease in the number of seed deals, again, echoing some of the things that we saw in those quarterly reports from PitchBook back in 2022. However, an increase in Series A. We see a similar decline in value for seed, but increased interest in Series A. Halo is great because it gives us some regional differences. So I'll be highlighting those as we move through the deck. One of the big questions is always, where is the money coming from? So the California angel groups are responsible for over 30% of the dollars invested and 27% of the angel deals. And so pretty much that means they really outshine every other region for where does the angel money come from. When we think about homegrownness, Northwest shines. What that means is, are the angel groups keeping the money that they fund within their own region, or do they fund outside the region? So here you can see that the Pacific Northwest, 81% of the funds stay in the Northwest, and you can see a variety of how that spreads out across many other different regions, ending up with New York, where more of that region's funding is outside of the region rather than inside the region. So that often leads you to question, well, where does that money outside the region go? Both in deals as a number and percent of those dollars invested. The top two areas are the Southeast and California. So when we look at what regions were most of the deals in, it's no surprise that California and the Southeast are taking away the lion's share of those. Pacific Northwest ranked number 3 at 10% of the angel-backed deals. When we want to know about what kind of areas are being funded, in order, we have information tech, B2C, healthcare, and B2B as the 4 kind of primary areas. And you'll see that the Pacific Northwest kind of matches the national trend. We are overinvested in, no surprise, infotech. When we think about pre-money valuations, this view only focuses on seed. I'll have another slide right after this on Series A. And so in 2022, we did see that large increase in the seed valuations. For the median for the nation, it was 9 million, and the average was 12. And let me just take a side note. Whenever meeting summary, okay, get it. Whenever I present data, I really like to present both the median and the average. The reason for that is if we only presented the average gets skewed if there are, let's say, a number of deals or certain things way at the high end. So if there's one thing I usually look at, it is that median that kind of keeps things in line. So here again, the 9 million median for seed, and that gets a comparison to in the Pacific Northwest is 10, so pretty comparable. When we jump to Series A, we see, whew, man, there was a 72% increase in the pre-seed, pre-money Series A round valuations to jump that up to 28 million, with the national average at 45 million. So a huge increase that we saw in 2022. And as you know, and you got that little preview from PitchBook in 2023, we know those are not going to be sustained at that Series A level. When we look at the rounds themselves, it's interesting to see Halo found that the seed round, that the actual investment, both nationally and here in the Northwest, was about 50% of what the round was asking. So the median in the Northwest, founders were going out for was $1 million. What was funded, the actual investment as a median was 500K, very similar stats to that nationally. Different story in a Series A. Series A were almost funded totally with the Pacific Northwest as starting as a medium 6.5 million, actual investment at 6, national actual investment asking 7, getting 7. So interesting difference between the two. And then you can also see this is a good visual that shows the stark differences in growth on a number of different metrics between that seed and Series A round in 2022. So we can see at the pre-money valuation, we can see at the median round size and the median investment, all large jumps in Series A that was not reflected in the same in kind in the seed stage. One of the things that's really important for both founders and funders is how much do they have for new company investments within their portfolio, and how much is held on for follow-on on companies they have already invested in. In 2022, we actually saw a flip here between new companies being the largest percentage, and now in 2022, from a national perspective, the follow-ons are 54%, new companies funded at 46% of the portfolio. So as a founder, you need to remember when you're talking to the other side of the table, all the money they have is not necessarily available for new companies because they're continuing to fund the investments they've already made. When we think about the vehicles, preferred equity is the #1 vehicle for both seed and Series A. However, in seed, it's very close to convertible notes, as you can see over here on the right, 42%, 40% with safes coming in, popping in double digits now at 13%. Series A, you know, the safes are pretty much non-existent, and the preferred equity being the bulk of the vehicle used. McKinsey & Company put out a great study called Diversity Wins, How Inclusion Matters. And it's backed by a lot of data, of course, which I would love, that show that companies with diverse executive teams are more likely to outperform their peers. So one of the other things we like to look at is diversity at the CEO level. And on the left here, we have looking at females across all the regions reported by the Halo report. And what we see here on the left is that 23% of all female CEOs can be found in California, 9% of those in the Pacific Northwest. If we look at it and kind of flip the metric and look for what is the percentage of female CEOs within each region, we will see the highest region is New York, where a quarter of all of the CEOs in the New York region are women. However, we also see this view from a minority lens. And on the left, what we're seeing is that 33%, so 1/3 of all minority CEOs are found in California in terms of deals funded in that state. On the right, if we look at minority CEOs within the region, 31%. So California is leading on both those fronts, where almost clearly 1/3 of all CEOs in the California region that were funded in this time period were in a minority class. So that's great to see. And when we think about things closer to home here in Seattle, looking at that female focus, we flip that metric a little bit because we are so lucky, as I said before, to have a number of the angel groups as well as VCs that share their data with us so we can all learn together. One of the things that we continue to see year after year, which is such a great stat, is the strength of female investors within local Seattle angel groups. So we can see that Seattle Angel Conference, Transatlantic Conference, E8, all have extremely high female participation, 34, 33, 29%. AOA still has a above average participation rate by female investors at 21%, Kretsu not far behind at 19, and Swan at 10. So it's great to see that female founders will be able to see female funders on the other side of the table in our angel organizations as they go look for funding. And when we think about the funders here in the area, everyone wasn't able to come tonight, but I'm so excited for those funders that we have here this evening. And this larger group has been sharing data with us. So you guys will get to see a large ecosystem picture in the next couple slides. There have been some changes in the landscape between 2022 and 2023. So a fund, an angel event fund, APIS, which is focused on the medical sector, went quiet for 2023. Sea change as Venture Us, we'll be able to talk to you about tonight, went quiet on that front. And what's exciting is we're seeing it come to life in a new form. And Gary, it's so great to see you here. And I'm sure you can even give us a little conversation where Puget Sound Venture Club joined and merged with AOA this year. So two great organizations becoming one. So when we look at the numbers this year, we'll see a couple less bubbles is what that means to you in the upcoming slides. So we have this large variety of angel groups here. You can see there are different types as we go from an event fund, an angel network, micro VCs, venture builders, and VCs. So kind of the full gambit. And as a founder, it is really important to understand at what stage are they funding. So if you are pre-seed, you want to make sure you're matching yourself with a like kind funder. and understanding what kind of check size, which is what we will share, that you can expect, and what they're interested in. So with that, we're going to change our screens. I'm going to stop sharing here, share a different screen. So and can you guys see the bubble charts now? Yes, I see you can. Great. So what we've been able to do is we have a consistent reporting group between 2022 and 2023. And what we have here in this first view, we're going to have three views that we will show. This view is the local ecosystem players and funders, where the average investment deal size is under 300K. So we can see what we're seeing here is 2022 numbers. So we have Swan, First Row Partners, TAC, Graham and Walker, Flywheel, Apis, SAC, Virtual Angel Network, all down in this area with a number of deals kind of less than 10 down here, and a check size under 150K. PSVC, Puget Sound Venture Club, has representation of many deals at our mid-range deal size check in this area. And then up here on the right, with a little bit larger check size, but still under 300, we have Startup Haven, Untapped Ventures, and E8. E8 being our local focus on clean tech. And so what the cool thing we can do is we can say that was our view in 2022, and this is what happens in 2023. So we lost Puget Sound Venture Club as an individual venture, but we still have, as you can see, a pretty healthy ecosystem in this average investment deal size number. What you can't see is these trailers are here to tell you, well, there was movement in a direction. Here, E8's average deal size got smaller. Graham and Walker's got bigger. Seattle Angel Conference wrote bigger, on average, bigger checks in 2023 than 2022. So it's great to know where your funders are when you're talking with them, so that you can understand the role they play and understand if it is a fit for you. So as we move up, the next view that we're going to look at is, so this was under 300K. We're now going to look at under $1 million. So what you see here is everything, all of the funders that we just saw have now moved to the lower left here, and they're all dark blue for 2022. And in the right, above the 400K mark, between 400 and 700K for these check sizes, you can see Sea Change, AOA, Allen AI, and Keiretsu Northwest. That again, this y-axis is the number of deals. So up here in the upper right, we see Keiretsu, Forum Northwest writing larger checks, and many of them. But also in this part of our ecosystem, we have consistent check writers in AOA and Allen AI. And you can see that as we show the 2023 numbers with a little bit of movement, but Keiretsu and AOA pretty much staying at the same level of involvement in the ecosystem in 2023 that they had in 2022. And last, but certainly not least, we go up to the large numbers, and this is the view of looking at things under 10 million here in our ecosystem. So what we saw in the last slide again is kind of down to the left, because our access for deal size now goes up to $10 million. We can see Keiretsu Forum Northwest still standing out here. We've got our lump of all of a number of the other funders here in the under 1 million. And we have Madrona as a core fund. They have two funds, and super interesting for you guys to understand. Madrona has two funds. Madrona Core Fund is for pre-seed, seed, and Series A. and Madrona Acceleration Fund is for B and C. So super interesting, and for everyone to know that Madrona does look to get low into this space and is writing a number of checks. So please keep them in mind when you're thinking about who you want to talk to. And in 2023, we can see that there was movement here, and Madrona, we still have healthy involvement in both their core and acceleration funds. So super exciting to be able to share with you this data. The latest data is hot off the presses because this is 2023 data. And so they were shooting this data to me as recent as this morning. So I really appreciate you guys' interest. Hope that you are able to pick up a new tidbit or two on the data stuff and turn it back over to John. And now the real excitement can start in chatting with the funders and having them share with you their firsthand experiences and answer your questions.
Thanks so much, Elaine. Really appreciate you putting all of that together. I see a note from Nate asking about Fuse. We didn't get any information from Fuse, so we couldn't put them in the pile. And there's definitely a bunch more funders in the larger scale. So we have about 64 entities that do some kind of funding. We're mostly focused at pre-seed and seed and people that do that work. So at this point, there we go. What we would like to do now is to have each of the different groups that are here come up and tell us a little bit about their group, basically to sort of outline what it is that makes your group interesting and where you're spending your time and energy. At the beginning, I'd like to invite Karen up from E8. Can you hit your raise hand button so I can find you in the list?
I can, but I'm going to have Dana, who's been on our board for 8 years, actually talk about E8. So Dana, do you want to raise
Okay.
your hand? There she is.
Thank you. That
Thanks,
makes it possible for me to do that.
There
Thank
I
you.
am. Hi
So,
there. Yes,
hi there.
thanks, Jen. We're doing a team effort tonight, Karen and I. So hi, everybody. I'm Dana Sather Robinson. I'm a board member at E8 Angels and a longtime member. E8 is a community of angel investors. So we invest individually in emerging clean tech companies. And I think that we're one of the longest running angel groups in the country that invests in clean tech. I don't have data on that, but from what we're the only one we know about that's been around as long as we have. Our mission is to accelerate the transition to a prosperous and cleaner world. We invest sometimes in pre-seed, mostly in seed and Series A, and we invest in companies throughout North America. We're based in Seattle. Our members come from all across North America, and we even have a few overseas. We, alongside financial support, we offer various resources to our portfolio companies. We have over 130 members, so we have a lot of range of expertise and really smart people. We encourage mentoring, advising, introductions to our network, pitch coaching, which is one of the things I do. And of course, we do a lot of follow-on funding. We have a very streamlined due diligence process that finishes with a comprehensive report that is sometimes shared with other investors. And I'd like to introduce our executive director, Karen Kidder, who's also on this call. And so we will both be putting our LinkedIns in the chat. So please connect with us. We'd love to hear from you. So if you're an emerging angel and want to learn about impact investing, pop into our breakout room for a chat. And if you're interested in funding, come chat with us or check out our website because that's where you apply. Thank you so much.
Cool. Thank you so much. I'm going to bring up Brett from Alliance of Angels now.
Oh,
Hi, Brett.
hello. Yes, hello, everyone. I am Brent Weeks. I've been a member of Alliance of Angels for about three and a half years or so. Gary Rittner from Puget Sound Venture Club is also on the line here. He is actually on our board of directors now. So when we merged with them, he and a few others, I think, received board seats. We are a sector agnostic, so we do have investments in all sorts of areas. We see about 50 to 60 companies come to us each month that go through our pre-screening group. And of that, we take about 5 or 6 of them and they present to us at our monthly luncheon. We meet 10 times a year. And of that, then we go into the due diligence. And we also, in addition to all of our members have the opportunity to individually invest in companies, we do have an annual investment fund. We refer to it as our innovation fund. And of that, any 2 members can submit a company for consideration of the members to vote on. And if the company is selected, there's a minimum check size of 100,000. We also have written last year some at 155,000. We hope to invest in about 12 or 15 companies just through the innovation fund alone over the next year. And that's pretty much what I've got.
Well, thank you so very much. I'm going to bring Nathan from Kretsu up next when I find him in the list here. There you are. Hi there. I can't hear you, Nathan.
There we go. Good evening, everybody, and thanks, John, and the whole team for organizing. Many years we've done the Meet the Funders event. It is fun when we're able to do it in person, but great to get so many people in here online, and great to see all of our Angel Group friends in the community, and hopefully we'll be able to do a lot more together this year. Quick overview of Kretsu Forum Northwest and Rockies. We're part of the Global Kretsu Forum Angel Investment Community and Network. We have 6 chapters globally. We oversee chapters here in the Northwest in Vancouver, BC, Seattle, Bellevue, Portland, Boise, Salt Lake City, and Denver, Boulder. But we do syndicate deals with our other chapter networks as well. We were very fortunate to see the funding levels continue in 2023, similar to what they were in 2024. A bit over 70 million invested in a bit over 100 companies. So our Kretsu way is about our grit. We're here to grow in a resilient way with a lot of integrity and transparency within our relationship between our companies and our members and our co-investment partners. We're a little unique in terms of angel groups. We have 23 full-time employees now, and so we built up quite a team virtually and globally to support our members and our companies going through our process. Our mission, as always, is really go-to-market funding. That's the right stage to come to us once you've got 400 to 500, 600,000 of revenue, capital raised, product done, ready for due diligence. That is definitely our hallmark, is our due diligence process, and then being able to syndicate the companies as they get through that due diligence process across our syndication network of other angel groups, family offices, and our Kretsu community, and continuing to add to that here in 2024 with additional corporate venture partners and other groups. So we are a large global association. We do look at all types of deal flow. Software, technology, hardware. About half of what we do is life science and healthcare. Our syndication network is up to 58 angel groups and growing. So we're looking forward to getting this up over 75, up to 100 different investment organizations and family offices that we're syndicating with in 2024. That's one of our big growth initiatives. And we should see a little bit more data trickle in, but right now we're at about 73 million, 110, 12 companies here for 2023. Obviously, it was a tough year last year with all the financials and bank challenges. So great to be where we are here in 2024 with the public markets where they are and a lot of capital available, and certainly seeing entrepreneurs with well-priced deals get funded. About 35% tech, 35% life science. We love syndicating clean tech deals with our clean tech funds and partners. We also look at real estate, and we also have funds that come through and raise capital from our LP network. So we're pleased to be recognized along with a number of the groups here on the call today as some of the most active groups in the country, and want to invite everybody to come to our expo coming up at Microsoft. It's a great get together of the entire investment community here. March 14th and 15th, we'll be back at Microsoft. And special announcement today, we just had our first closing last week on a new initiative of Brianna, my wife, and I. We've launched the Northwest Angel Fund as an opportunity for bringing more LPs into our community and making angel investing a bit more simple. So this will be a new addition to the chart this next year. We've raised our first $1.5 million, added our first 20 LPs to the fund. And our goal is to continue to grow the fund up to 10 million, bring on another 55 or so investors by June, and be able to have this as an additional capital source to complement Brianna and I's direct investing and building that portfolio and providing more opportunity to lead more deals and syndicate more deals here in the Northwest. So we're hopeful that's a positive addition to the local investment community. And if folks are interested in learning more, please reach out. We'd love to have more folks actively investing as well as passively allocating capital and working more to build the LP network within the region, as well as supporting the other GPs, just like we do with the other investment funds. So we'll be in the breakout session. Feel free to reach out. Just go to k4northwest.com. All of our contact information is there. And we look forward to working with everybody here for a successful 2024. Thanks, John.
Cool. Thank you so much, Nathan. I'm going to bring up Minda now from First Row. Hi, Minda.
Hello. Hi. Thanks for having me. Gosh, where to even begin? So First Row Partners, I'm one of the two founding partners. The other is Yoko Okano. She and I come from operator backgrounds and spent a lot of time in big tech and startups doing frontline roles, and built a thesis that we, as angels, decided to build a fund around, and that's First Row. So we are pre-seed specialists, meaning we invest in companies when they're at their earliest stages, sometimes before revenue, but mostly after, and when they're still sort of building that first $1 million raise. Mostly we write checks of 100 to 150K, but with our next fund, we will be more of a 250K to 400K check at pre-seed. We don't do any follow-ons, although we will potentially do an SPV to follow on with those investments. But our strategy is really to be excellent at pre-seed investing. And so that means supporting founders across a really broad spectrum of programs, and also really connecting them in with our LP network. So one of the things that we did, so with our first fund, we invested in 21 companies in counting. And with our next fund, we'll probably do about the same, but with larger check sizes. Our thesis is to really support the tech that is behind human innovation, and especially in the areas of storytelling and brand building and content creation. And so if you look at our portfolio on our website at firstrowpartners.vc, you'll see portfolio companies that have kind of a common theme there, as well as the convergence of media and commerce. So we geek out on our thesis. And the other thing that we're really known for is an arts-based process for investing, which allows us to be really disciplined, thorough, and distinctive, we think, in the process. So a lot of founders and funders have actually really enjoyed that. So we decided to showcase that last fall with the Ensemble Fund, which was really based on the Seattle Angel Conference and our wonderful experiences there as angels and fund managers, where we wanted to really help people who had experience with investing and were ready to kind of take a more advanced investing role, but wanted to still have that curated collaboration. And so we finished that in December. And now we're looking at really bringing that on as a more active LP experience. And so I think that for getting to know First Row as a founder, it's to really know that we are very open and broad in sharing our mentoring calendars and times. I'll put a link in the chat to the places you can connect with us and find us in the community. We try and be extremely accessible. We also both teach at the University of Washington. I teach an angel investing class. I also teach a class alongside the Creative Destruction Lab program for science and engineering-based startups. And Yoko teaches a venture class over in the entrepreneurship program. So we're constantly looking to meet new people. And we also, on the LP side, to get to know us, we really have done a lot to build relationships with angels, not only here in the Northwest, but across the country, who have really been interested in what we're doing. So the active LP experience includes a lot of, different kinds of events and formats that suit the group. But something that we did that is sort of an LP experience, but also gets more broad, is this kind of notable deals and drinks event that we do that brings founders and funders together. And we look at a deal together as if it were a piece of art or kind of book club style. And so I think that the way that First Row has sort of become known in the community is that we're really disciplined about making our investments and how we do that, but that we're really interested and accessible to the always the latest group of entrepreneurs who are launching their companies, and we want to get to know them. So myself and Yoko are, accessible, findable. I'll give you all the details, but looking forward to meeting other people who are interested in us, whether you're a founder or prospective LP, when we're in the breakout rooms.
Well, thank you so much. I'm going to bring up Waverly from Seattle Angel Conference. Hi, Waverly.
Hi, John. Hello, everyone. I'm Waverly Swinton, and I represent Seattle Angel Conference, or SAC, as you may have heard it called a few times on this call. And I think a good way to understand SAC is to first just understand our mission. And something that's really important to SAC is to create new angel investors. And one of the things that we know, and you may know this from the data, is there are many people in the world who are accredited investors who could participate in angel investing, and they simply don't know that they can do it. And if they know that they can do it, they may not know how, or there may be some barrier to getting them started. And so really what we're trying to do is partially solve that problem and create new angels that can then go off and sort of do all kinds of different opportunities in the world. So now how do we go about doing that is twice per year, we run what's called the Seattle Angel Conference, and we bring in a group of new angels and returning angels. And what we aim for is a really nice split between people who are new in the sense, maybe they've written a few checks, but they want to kind of refine their investment thesis. They may be completely new in that it's their first check. And then we bring together that group with alumni and have around 30 or 40 investors who are looking for the next great company to invest in. Now, what's kind of unique about this whole experience is that it's a learning journey both for the investors as well as for the founders. So as you can imagine, when you bring together 30 to 40 people who come from different backgrounds and different perspectives on angel investing, every single time the investment thesis changes, and every single time there are learnings happening on both sides from new angels, returning angels, as well as founders who participate in the conference. We also offer in this format feedback to every single founder. So if you're someone who's thinking, okay, I've never really heard that feedback from an investor, I'd really love to know how my 1-minute pitch is resonating, we do offer everyone who participates that opportunity to get feedback. So again, we're really oriented around kind of getting that learning journey. Very particular about the format is how it's run. So we do this over 12 weeks. And if you've ever seen American Idol or any other competition, it's highly similar to that format where you're going to have pitches 1 week, investors will kind of gather their feedback, and then we'll go through that kind of elimination style, eventually getting down to a smaller group. And then that smaller group will be kind of conducted through the whole due diligence process with groups of investors. So if you're someone, again, who's thinking about maybe looking into an opportunity where you're going to get feedback, we really could help in that sense. If you're a new angel and you're not sure where to get started, we can help in that sense. If you're a returning angel and you're thinking, I want to get my network stronger, we have about 700 alumni, so we can help in that sense. But really, it's oriented around kind of that conference learning by doing format. And over the years, the conference has been running since 2012. So as you can imagine, there are lots of angels and lots of companies that we've supported in different industries and sectors. So happy to share more about the next conference. We'll be starting relatively soon. I find it a little hard to believe, but the company deadline is coming up in a week. We'll have investors start reviewing in 2 weeks. So now is a great time, if you think you're interested, to just connect with me. And then, of course, we have 2 conferences per year, so lots of opportunities to get involved.
Cool. Thank you so very much. Next, I'll bring up Dan Delmar from Virtual Angels Network.
Thank you, John. Virtual Angels Network is as the name implies, from the beginning, a totally virtual network of angel investors, and by virtue of being totally virtual, we're able to be totally national, actually, in North America. So we don't have the legacy of being focused on one particular geographic area, Pacific Northwest or any others. We look at deals from all over the country, and our objective is to bring the best deals from all over the country to our members all over the country. We're interested in all different industries. In terms of the maturity or the stage of the company, we're focused primarily on seed deals, but we do look at some pre-seed and some Series A. It really depends also on the industry, because I think the med tech, healthcare, medical device, biotech, and so forth industries that require, many of which require FDA approval, are a different kettle of fish than all the other industries in terms of the stage and the investment level. Obviously, as with I think all of the groups, where our members are all accredited investors, but we do have pitch events every 2 to 3 months where we invite any accredited investor. It's not just restricted to our existing members. And we're actually going to have one of those coming up on March 6th. We've already picked the 4 best companies from around the country that we've invited to pitch on March 6th. But any startup that or young company that is looking for funding that is not going to be closing before then is welcome to apply through our website, virtualangels.net. Probably the right timing would be sometime in April for the March or April for the next pitch event. See where in terms from the investor point of view, because we're a small group, we're about 30 members. We have a lot of personal interaction. We're really very good for both. So we have some very experienced angel investors like myself, and we have some people who are new to angel investing as early as 2.5 years ago. By now, through the interactions that we've had and the deals that we've looked at together as a team, they've become fairly experienced already. So it's a good way for both experienced angel investors and fairly new to the activity investors to join a group, get a lot of benefit from the teamwork that we do together in sourcing deals from all over the country, screening them, deciding which are the 4 best to invite to apply, pitch night, sharing our insights, both in the Q&A and separately after the companies leave, and we have a more confidential private discussion among the potential investors. In due diligence, all of this is done with an awful lot of teamwork and get the benefit of each other's knowledge and experience, because a lot of us have had whole careers in different industries. And at the end then, like the other networks, we make an individual decision as to whether to invest or not. We do not, Virtual Angels Network has no fund. It's all individual responsibility and individual discretion as to which companies we invest in as individuals. So thank you, John, very much for having us join the group. And I'm very glad to meet everybody. If you're interested in learning more or applying to Virtual Angels Network, it's virtualangels.net is our website, and it's through there. There's a page for entrepreneurs to apply.
Cool. Thank you so much. Next, I'm bringing up Keith Lapel from Venturous.
Hey, thank you very much, John. John, I was just reflecting that it was 11 years ago this fall that you and I met. I came out at an invitation to join Seattle Angel Conference 2 that was getting underway. And I remember introducing myself to you, and I said, hey, I'm just here to kind of sit and listen in and see what this thing is all about. I don't know anything about angel investing. And I remember what you said to me, John. You said, well, I hope you're here to do more than just listen in. I want you to be active, be involved, get involved in the process. And that invitation, I think I took to heart. I got to work with you on Seattle Angel Conference 2 through 7, got to be an organizer for Seattle Angel Conferences 5 and 6. We had a pretty exciting exit from Seattle Angel Conference 6 back last year or 2 years ago. From the first place winner in that. And then we got to work together to form the Seattle Angel Fund, as you recall, and launch that. And that became Sea Change, for those of you who may have heard of the Sea Change Fund. We had 8 years of 3 of Seattle Angel Fund, and then it renamed under Susan Preston's management leadership of, we basically brought, John, you, me, and a group of us brought the concept of group angel investing through a fund to Seattle. It was something that back then, 10 years ago, we really didn't have in Seattle, was the opportunity to pull together a group of both new and seasoned angel investors, people, I mean, largely a lot of Seattle Angel Conference graduates. We really valued the training and experience that was coming from the Seattle Angel Conference participants to really form a group that would have a deep and broad knowledge pool to support founders. And we pooled some money together, and we created Seattle's really first at the time group angel fund, active group angel fund. And that went swimmingly. It grew, started Seattle Angel Fund, and then became an even larger Sea Change Fund at $5 million. By the time Fund 8 had happened, we had a great portfolio. We had great early exits, as you know, from both the first funds. We had a 21x exit out of the first fund. It was really quite a ride. But what happened last year was that the folks who were managing Sea Change last year, the final Sea Change Fund 8, decided not to continue the group funding model. They wanted to continue in a more managed fund model. And that left a lot of us who were really into the active group angel model that we thought we really saw working well, both and we had great feedback from founders and longtime participants. We wanted to keep it going somehow. And so myself, Jonathan Cagle, and Jennifer Henry, who are longtime members of Sea Change, decided that we wanted to, we had an opportunity here to kind of relaunch or keep Sea Change going, but we also had an opportunity to really improve it. So what we did was we spoke to founders, went out and talked to some of the portfolio company founders from Sea Change. We went and talked to a lot of both longtime former Seattle Angel Fund and Sea Change investors, as well as more recent ones. And we said, what did you like? What worked and what didn't? What do you think? What made it rewarding? What did you see working for founders? What did you see working in the decision process? So we collected that. We spent a bunch of months last year, and we put that all together. And we're relaunching this. We are now, we've just this month really coming out as Venturous. We're using a new name because we are we've made some changes. So it's the same idea of a core of a group of seasoned and new angel investors who can come together, pool their investing experience, pool their professional backgrounds and connections, work together to both find companies and go through the screening and due diligence process together and make group collaborative investments together through a fund. But we're going to make some changes because we found some ways we think we can do it faster. We can provide a better experience for the founders. We can move faster in due diligence. We can be more consistent. We can grow together faster as angels in how we do this together. And we can actually make it more affordable and flexible to be an angel investor. And the Sea Change Fund had started to get to about a $50,000 buy-in. We're bringing that back down to $25,000, but we've found a unique way to make it possible to increase your stake in companies as they will come through and as the fund invests. And I will spare you the details on that. If it sounds intriguing, drop me a line. So we are really probably brand new. Just last week is when we really rolled out to our prospective investors, and we're going to be starting our screening and due diligence this month. We've assembled our investment board of 12 of us who are going to be the core, who are going to basically be on the front lines for screening and due diligence with pre-seed and seed stage founders. In sector agnostic, as I heard that term used, we are casting a wide net for Pacific Northwest based and Pacific Northwest connected early stage companies. The other thing we're doing is we're going back to in-person meetings. One of the things we heard loud and clear from founders and from longtime participants is the magic that happens in the room when you can stand and talk and rub shoulders with other investors, other members of the startup community, and with the founders. And so, we're going to be a hybrid model. It will be possible to participate remotely, but we're going to be having group member meetings as well, where that magic can happen. So we're venturous. We're just getting started. If you're an interested investor or interested founder, look me up on LinkedIn. Thank you very much.
Well, thanks very much. I'm going to try and bring Nate up. Need Nate to turn on his video.
All right. Can you see me?
I lost you when you raised your hand. There you are.
Okay.
Gotcha.
So Swan Venture Fund, we are an active angel fund based in Seattle. We invest in pre-seed, sometimes seed stage companies. We were founded in 2015. Myself, Peter Weiss, Jim Reed, a total of 24 investors. We came together to form Swan, and we've been investing since then. I think when we started, we were sort of looking at angels within the community. There are a couple cycles that we noticed. Every 2 or 3 years, new angels might come into the market and sort of cycle out due to lack of cash. If they didn't really build a community around themselves. And then every 7 or 8 years, some folks would cycle out for lack of liquidity. And so we were just trying to think of why this was happening. We also noticed that a lot of investors had a lack of time to commit to building a sufficiently sized portfolio to adequately diversify their returns. It's very risky to invest into startup companies, but angel funds do allow angels to execute on a plan and to build out a well-diversified portfolio. And I would say even more than one angel fund would help you do that. So anyway, we've formed 3 funds since 2015. Now we're about to form our 4th fund. So if you're accredited, happy to talk more about that. I'd say that our focus really is on quality over volume. We're interested in realizing returns for our LPs, for being great partners with our portfolio companies. We do focus on process, active participation with our LPs. Our LPs, our angels, we all make investment decisions together, and we meet monthly in both virtual and hybrid meetings. So we've got the whole setup to meet personally and to stream and to have people in the room ask questions of the founders if they're somewhere else, and to be able to really interact. So for the founders out there, we invest typically in B2B software, broadly defined market accelerating technologies, capital efficient hard science, medical devices, health IT, and you could say that we're Pacific Northwest focused. We've made some investments in BC and in California. We've looked at Colorado and Texas as well. But yeah, we do provide a lot of support and advice to our portfolio companies. So that's a short and sweet for you, John.
Cool. Thanks very much. I'm going to bring Bob Cremens up next. You're on mute.
That's a rookie move. Thank you, John, for putting this together. It's terrific to see so many familiar faces and some new ones as well. So by way of background, Startup Haven Ventures, our venture fund and accelerator, grew out of something else that I know some of you are aware of called Startup Haven. And Startup Haven started in 2006 as a dinner and card playing gathering among founders and investors. And after doing that for some months, because I wanted to learn how to play cards, having learned how to play cards, what I saw happening that I didn't want to stop was what happens when you get founders and investors around a table and let them get to know each other. And I saw relationships happening and I loved it and didn't want to stop. So I kept it going and it grew and grew. And I could talk for hours about this. The short story is it grew and grew. We ended up starting a chapter in Portland and then San Diego and then San Francisco and then Silicon Valley and then LA and began to invite founders from other places around the country to join just to build relationships. There was no motive other than to connect founders with each other and with investors and to build relationships. And it's a magical thing to see a room full of founders and investors and know that all you have to do is stand back and watch and amazing things will happen. And I learned a lot in that experience. By way of background, I was also a serial founder myself and was a founder at the time I started doing this. So this was a 10 to 15% of my time, passion project, a ton of fun, just bringing people together, and got to see that grow and grow. And at some point, I had created a rock that I could no longer lift. Startup Haven had grown. I think about this time, it was around 1,600 founders, investors, mostly along the West Coast, in those 6 chapter cities. And the girth of that thing forced me to make a decision to either stop doing anything else that I would ever do and pay attention to that, or let it go and go do something else. And the impact that I'd seen from bringing founders, investors together in the ways that we were doing it was very satisfying. And I did not want to stop doing that. So I had some ideas in years past about ways to continue to help that network of founders and investors. By then we weren't just doing dinner and poker. We do a number of other programs to help support founders, office hours, ask and offers, some other kinds of events, breakfasts and dinners and other things, just to bring founders together so that they can build real relationships. I think it's a mistake to think that events are the best use of time for founders. I think things that facilitate real and deep relationships are the things that have the most ROI for a founder or investor's time. And so that's what we were focused on. And over all those years, I'd seen so many companies that had come through the program. I got to see them longitudinally, month after month, quarter after quarter, for years. We have Startup Haven members who've been involved for 15, 16, 17 years since the beginning. It's been 18 years now, and they still keep coming back. And I saw the opportunity to create more of a funding mechanism for that network. And so we experimented in 2019 with an accelerator. I've been very active as a mentor and advisor for all these years, hundreds of companies. I've been very active with Techstars and some other accelerators, and thought that over all those years I'd seen some patterns, and thought that I was privileged to see the the inside sausage making of so many companies. And it was always very, very gratifying to be able to help. And I wanted to do that more. I had a thesis for how that would be effective. Does the world really need another accelerator? My answer back then was no. And I wanted to make sure that if I was going to do something, it was going to be genuinely unique and extraordinarily helpful. And the framework that I had been working on for some years, just based on my mentoring and advising, turned out to be a great curriculum, if you will, for an accelerator. So we launched the first accelerator cohort in 2019, launched a venture fund, Fund 1, in 2020. And it's been a terrific experience. We write checks of 100K to 300K into rounds typically under $1 million. 500K to 750 is kind of our sweet spot. We're almost always the only, if not at least the first institutional investor in any round that we invest in. We invest both through the accelerator and directly. In Fund 1, we split it fairly evenly between accelerator investments and direct investments. In the spirit of making announcements, I will say too, tomorrow we execute our first close for Fund 2. And we have our first 2 investments lined up that we'll make promptly thereafter. Very excited about that. And we'll be focusing more now on accelerator investments. Principally, we will invest through our accelerator, but we'll still make direct investments too. Still about the same check sizes, still about the same terms. We can't really, as pre-seed investors, invest in things that aren't capital efficient, as I think Dan was mentioning as well. So we invest eclectically, not agnostically, but certainly eclectically across sectors. And the capital efficiency is an important part. Our thesis is we want to find companies that can take our capital and a little bit more, perhaps, and our help and a little bit more, and get to a next round of funding. And if we don't think that we can help a company get to their next round of funding, then it's not a good fit for us. And honestly, I don't think it's a good fit for them. And so we look for companies where we think that our combination of capital and help can get a company to their next round of funding. The curriculum, as I mentioned before, it's called Groundwork, and we teach that in the accelerator. We teach that to the founders so that they can build a cogent story about how they're going to build a company and get to the next round of funding. And we use that same framework ourselves in evaluating companies to determine whether or not they're a good fit. If I can't tell a cogent story about how I can help a company get to the next round of funding, then that's probably not a good fit. And so we have a fairly rigorous process that we use to analyze whether or not a company is a good fit for us. Because there is this framework, we do, and this is for the founders out there. I know we're not a good fit for everybody. We tend toward founders who like to roll up their sleeves and do the disciplined work to answer the hard questions about what their company needs to do. One of our mantras is what has to be true. So when we meet a company and we're considering them either for the accelerator or for a direct investment fund, we really want to hear how the founder thinks about the things that have to be true in order for them to reach whatever strategic milestone they think is next for them. And that turns out to be a deceivingly complicated question. And so we roll up our sleeves in the accelerator, and when we're doing diligence with our prospective investments, to make sure that not only can we answer that question, but we want founders who are also determined and excited to answer that question for themselves over and over and over again, because that's the experience of building a startup. So for the accelerator itself, we do small cohorts. We have a dedicated, what we refer to as executive mentors, who work closely with the teams throughout the entire program. I'll acknowledge Minda for being one of our very first executive mentors, and I miss her every time, and I hope that she'll come back someday. But that very deep dive with a company is we think is essential for them to get the best opportunity to get to their next round, and the best help that they're going to get from us, from our accelerator, is going to come from that really deep week after week after week engagement with very experienced founders, investors who understand what they're trying to do, and show up every week to help them operationally get there. So those small cohorts, we don't have the normal, apply in some month, and then 3 months later we have a selection process, and a month later we invite you, and then it's a 3-month program. We try to be more nimble than that. It's usually only a few weeks between when we find a company and when we make an offer and try to onboard them into the accelerator. The funding support that we give is a little bit non-traditional too. We don't do a demo day. It's our experience that founders who go through an accelerator program may or may not be ready to fundraise at the end of an arbitrary 90-day period. And so we really work with those companies to figure out what's right for them to raise their next round. Their next round should be determined by a strategic milestone that they're going to reach, that their next investors will agree is the right milestone. And sometimes it takes longer than 90 days to figure that out and to get there. So we have a broad network of investors, and we try to connect founders with good fit investors for them to raise their next round. We never follow on. We write first checks. We'll write the only check sometimes, but we don't reserve any capital for follow on at pre-seed. We think it just is the case that next round of funding is not necessarily the win signal, and we risk signaling to our other portfolio companies that they're not good enough if we only invest in some of them. So in the pre-seed, it's very, very early. We're, as I said, first round, first check, only check. So it's really important that we don't send signals to other investors that there's the good ones and the bad ones. They're all equal to us. We try to help all of them raise capital when it's time. I don't think I have anything. If anybody's interested in learning more about Startup Haven, the sort of network of founders investors, happy to share more with you. I'll put my contact information in the chat. Anyone who's an accredited and active investor is welcome to join Startup Haven as a member of Startup Haven. And if you're a full-time founder working on a venture scalable company, and you have at least some early elements of progress, traction, commercialization, something, then you're welcome to join Startup Haven as a member of the network as well. We do offer, as I said, some programs, workshops. Capital strategy workshop is my favorite, and a number of other programs to help you connect with other founders investors. Our mandate is North America. So we started with 6 chapters, by the way. Now we have 14. We'll have many more by the end of this year. We want to support venture scale founders no matter where they are. And if there's 2 venture scale founders in some small town, they should join Startup Haven and connect with the network of right now about 2,500 founders and investors all over North America. So happy to chat with anybody who's interested in learning more about anything. So I'll drop my contact information in the chat. Thanks again, John.
Thanks so much. And we'll do breakout rooms after this. I'm going to bring up Josh from Venture Partners.
Hey, John, thanks for the intro here. I'm just going to go ahead and share my screen really quick.
Yep.
All right. So I'm Josh. I'm the cohort manager for Venture Partners. So our mission here is to create a pipeline of skilled fund associates and future fund managers. And our big thing is to diversify the decision makers in venture capital. And so part of this is like through our team, our executive director, Himalaya Raupatla. One of the big things that she saw is a lot of the people when she's working with funds or different investors that she didn't feel like a lot of people really fit like what her mission was and her thesis was. So she created our organization. It's headed by Luis Balderas Villagrana as the program director. I'm the cohort manager, so I manage the fellows that go through as well as helping them with the due diligence and going through and helping them to place at different funds and associate roles throughout the Pacific Northwest and now throughout the United States. So some of the great things that we've been doing. So last summer we did partnered with San Jose State. We had a summer intensive, so we had 7 participants, organized due diligence with 19 different companies. So we have them go through, they produce investment memos, and then they pitch to investors and founders. So we coordinated events with Venture Forward. We had them go to Unshackled and did a lot of different roundtable discussions in Silicon Valley. So this really gives the people an immersive like venture capital experience. They get to meet with fund managers, they're meeting with angels, they're meeting with investors, they're meeting with founders, and they're actively working with them on producing their memos. So some of the great things about this program is like the relationships and opportunities that we're building. Currently, we've outreached to 200 plus VCs across the United States, about 350 individuals, and we've interviewed 30 plus fund managers and GPs. One of the big things that we're doing is building the employment pipeline for our program. So we're establishing employment opportunities for our fellows, and we're also collaborating with several new organizations as well. Some of the outreach and partnerships, you know, we've gone to Silicon Valley, we go to Seattle quite often. Lately, we've been in Washington, D.C. and New York City. I'm engaging with funds on the East Coast. So we have several partnerships here in Oregon, Lamilson Foundation, Business Oregon, and Perkins Coie. PSF is also one of the supporters as well. So we have a lot of support here, and VirtuLab is another one. We're also looking for other partnerships. So if any of you are interested in partnering with venture partners, we'd love to hop on a call and go through a little bit more about our process and some of the previous fellows. So in this program, what we're looking for is we're looking for individuals from underrepresented communities that want to pursue a career in venture capital as associates, investors, or any other roles that are associated there. So we're looking for people that are already involved in investment or finance background, or people that have tech backgrounds and they want to explore the venture capital space. So we kind of provide that place for them to go about, develop their own thesis and work actively as an associate. Right now, we're also working on the Emerge Leadership Program. So it's in partnership with a company called Cap and Feather. And so we're working on a pilot. So for individuals who are looking to start their own fund. So if you're interested in hearing more about that, please feel free to reach out to. But yeah, that's pretty much it. That's a little bit more about our program and how we're supporting people to become angel investors, as well as people trying to break into the venture capital industry.
Well, thank you so very much. I really appreciate you coming. Thank you everyone for being here. Hopefully you saw something that was interesting. I'm going to open up the breakout rooms. Please go visit the folks that you want to know more about, move around and try to get to know each other. I'll just assign people until people get to places. Let me know if you have questions. Did you see how to get to your room, Dan? Hey, Dave. You can do the breakout room chat if you like.
No, I gotta actually dip. It's